the jobs market start to really deteriorate. We know it's a lagging indicator. I think you even got the jobless claims just yesterday coming in a little bit higher than expectations, meaning more people filing for unemployment. So the tailwind is right there. And then the secondary tailwind is, where are you going to put your money? Let's say we do go into a U.S. recession and stocks go into a prolonged bear market.
Yeah.
Where else are you putting your money? Where do you protect your money with elevated inflation, no Fed rate hikes, and a stock market that the earnings per share continue to drop for stocks? If you look at the run in the dollar, so the dollar rallied 20%. Gold only at the lowest point was down about 7% on the year, I believe. So it showed relative strength. But again, watch out for gold. And I will say that it's going to be a great performer. Gold goes up significantly. That's great for them. But they are paying their employees more. They're paying more for their equipment. And that's why early in the year they underperformed gold so much, is because of those input costs. Their earnings were far, far less. Something else, which is the CBDC, right? And I think if you look at a central bank digital currency, that could be now an issue for some of these stable coins. All right. So again, stable coins, there's no scarcity to them. They're basically just pegged to the US dollar. You get a CBDC where it becomes just as fast to move currency around, and then that could be an issue. Now, I think that Bitcoin will ultimately kind of surpass everything and be fine. But again, it doesn't mean there won't be some rocky roads there for sure. Any digital currencies, it's going to make people explore more of the digital currencies. And I think that's 100% right. It's a great thing for the crypto sector. I still think, again, most cryptos won't survive when we get out of this period, but you'll see the top 20, 25 at least survive and thrive. 23, I'm looking at $65 as a target. That's about a it's about a $25 drop from here. So there's going to be more downside. It is at support. Amazon is absolutely currently at support. But I do think, again, as the markets deteriorate, you're going to see big players like Amazon go lower. And that has to do with consumer spending, right? People are going to feel poor. Their home prices are going down. Their savings, their 401ks are dropping. And you will see that consumer spending kind of come back in. It's taken in more money than any stock market globally, any asset class globally in the past, really 13 years since 2009. As you start to see less returns being generated, money will have to go towards other markets, including gold, including Bitcoin, once you get regulation in Bitcoin. So I think that there's plenty of money there in a prolonged bear period for gold to thrive and Bitcoin to thrive. I think the metals are definitely a place where you can hide a little bit, including the physical. And then I think for the most part, you want to steer clear of tech. And again, this is a tricky one. I'm a swing trader, so I'm in and out quite a bit. If you're not a swing trader, honestly, look towards foreign markets at this point. Look towards, I continue to like the chart on Brazil. The Brazil EWZ is the ETF that tracks the Brazilian stock market. I think China's had a huge run recently. If that can pull back, that becomes very, very attractive as well. And I think investors have to really think about what they're investing in, because remember, we don't even know what what's a security, what's a commodity. If it's a security, which is basically almost anything but Bitcoin, what are the rules that are going to be applied? What's the level of entry? Remember, to be listed on the NASDAQ, it costs a lot of money. So I have a feeling that there's going to be costs, like levels to entry. And there's going to be a lot of coins that can't handle that, including the transparency side.
Yeah.
And we don't know this. And again, you go through something like Terra Luna, you go through something like FTX. As an investor, those were mega market cap cryptos. You have to be really careful, and I'm sure there are more, things to fall here. So I really hope that they do come out with a real ETF. I think that would open and be a huge bull factor for Bitcoin. Don't expect it before regulation, but yeah, I think that I still remember that vividly, because we talked about how in 2017 they launched the futures, right? So they launched the futures when Bitcoin was at its all-time highs, and then here, and when Bitcoin was at its all-time highs, they launched the spot ETF, or the ETF. Anything the central bank produces, they're going to have their finger on the printing button, just like they do with fiat currencies. And it's just going to be like, okay, well, do we need more? Well, let's print more. Now let's take some away. And so it doesn't solve any of the issues that Bitcoin potentially solves as the digital gold, right? That scarcity aspect. So if I'm looking at that, I'm more concerned about the stable coins and how does that fluctuate with them? How do they handle that? That's a good question. I don't have a whole lot in terms of answers at this point. I think you start looking at certain technologies. I know we were going to mention Meta at some point, but I think you have to start focusing on companies that have been hated on, that have been beaten down by X percentage, and that actually could be developing something that could be huge. And again, just like when everyone loves something, I usually don't. When everyone hates on something and it's a good quality name, I usually start to get interested. Right? So I think initially what we're seeing now is them just backing down a little bit. And even when they're not raising anymore, that wouldn't be the pivot yet. I don't think that I think even when the Fed cuts rates, the market could be in such poor shape. And by the way, I think it's going to be well over a year before the Fed cuts rates. Let's be fair on that. Even in a recession that gets ugly, I think you're going to see a long period of time before the Fed has the guts to do it. Because remember, the Fed was all about transitory. They really got egg on their face in that situation. And they're going to be very careful about creating that same inflationary metal. So if we went into some sort of global, real bad recession, there might be some sort of demand destruction there. But at the same time, we know that there's a lot of new technology stuff coming out, electric vehicles and so forth, that use silver. So I would say this is that the pure play is gold, but I do like silver, and I think silver again will do fine, very, very well.
Rahul,
I'm looking at probably at least up to 28. Hard to know if we'll get above that, but I think $28 would be a pretty easy target. Maybe even testing $30, which again would be that recent high. We're 6 months out from that event, and I think that would just be a positive. But for me at this stage, the only thing that matters for crypto is regulation. And again, you got to get that in there, because again, you could be the biggest fan of Bitcoin. If institutional money doesn't come near it, it's never going to 100 or 200 or 500,000. That out. Look at the 2013 or 12 bull market, the 2017, and obviously the 2021, and you can look and see what those percentages were, and it probably will decrease. That would be a great way to figure out the potential target for it to go to not only look at our best case scenarios, but our worst case. What if we're wrong? How do we maneuver? How do we trade around our positions? And in essence, is if this was really the .com collapse, and let's say Bitcoin is the Amazon.com of the crypto markets. Right. Amazon dropped 95%, which puts you back at 3,500, which happens to be the pivot low support from the last cycle low.
Okay.
And I don't think that Gary Gensler is looking to really destroy Ethereum. There's so much built on Ethereum. I look at Ethereum and I kind of look at it and say, okay, Ethereum is like Apple or Microsoft. It has these firm foundations. There's value there. And I think if it's treated like a security, it's probably valued at least at what it's valued right now. We just have to see what those reporting requirements are. So I'm not too worried about that, believe it or not. I'd be more worried again for the tiny coins out there that are kind of just brand new with little to no use case. I think those are going to be kind of washed away. That and space travel. So you have the kind of the inward being in your own world, and then you have this outworld type of thing. And so I think Meta's doing the right thing. I know it wasn't popular with investors and the stock got punished because of it, but I think that Zuckerberg is smart enough to realize that his future product of Facebook and Instagram will slowly lose the people are getting more and more fed up with social media, I think, and there has to be something new. And he's trying to get to that. He's trying to be the number one there. And I think he'll succeed. I mean, if we can't really doubt him, he hasn't given us any reason to doubt just yet. So I'm a fan. I think if there's one stock that I would feel comfortable, and I would still want to pull back, right, on Meta, but I think $100 on Meta gets me in on the long side, even in a bear market. I would just say again, market-wise, for the next year, I continue to like the Brazilian stock market. I think that's a really interesting chart setup. And again, what's amazing about the Brazilian stock market is the last time I believe it made an all-time high was let me go on my chart here and scroll out, but I believe it was in 2008. So again, if you look at the U.S. markets and how 2008 is a distant memory, we're so far beyond that, it's not even funny. But the Brazilian market made a high and it still hasn't even gotten close to being back there. And so look for money to rotate into other areas of the globe that it hasn't been in. And you'll see, I think that one do very, very well in 2023.